Good morning, welcome back to Drawbridge Finance. My name's Levi Woods, and I'm not a financial advisor. This is an opinion channel on finances, and I'm a long-time investor, so I have a few opinions on things. If anybody wants to ask any questions about finances, and just write in the comments below, and I try to read all the comments. Some of my videos get quite a few comments, so I can't respond to everyone. But if I find it interesting, then I will make a video on that topic. So today, the topic that I'm going to cover is, if I invest my money, is there a chance that it could go to zero? Now, of course, with any sort of investment, there's always a risk of that investment going to zero. So really, you have to look at the company that you're investing in, and because the price of the stock is determined by the valuation that somebody else would be willing to pay for that portion of the company that you own. So that being said, some companies are higher risk than others and have a greater potential of going to zero. So if we look at like a mining company, it's speculative, and they're spending a lot of money up front to go out and dig up some minerals and do some mining. That activity is quite expensive, and they have a greater risk of not actually finding what they desire, and therefore not turning the profit that they would get if they found something. So the capital outlay that they require is large at the beginning, and then the amount of money that they make ultimately is determined by what they find in the ground. So for me personally, I look at mining stocks as a higher risk company than, say, a utility stock, which would be like Fortis, where they're charging their customers every single month for the electricity that they're providing to them. So some things like telephones like AT&T and Bell, Telus, Rogers, these are companies that generate income every single month, and it's a relatively stable business model. So when we see market downturns or market corrections and the valuation as a whole of the market drops down, it tends to affect those companies that have stable income less so, because there's a value in the stock because of their income stream. In my opinion, the safer side is companies like banks and utilities, because they have a customer base that's relatively stable. I don't know a lot of people that change their electrical service company very often, nor do they change their banks. So if you look at it from a long-term perspective, once you're a customer, you're often a long-time customer. Whereas like oil refining companies and service companies, two things that are speculative in nature, tend to be higher risk. So you have to always measure the risk reward. Now, in terms of market collapse, of course, there's a risk of the entire market dropping. I mean, we've seen historically a couple times where we've had massive reductions in the amount of capital that's in the market in general. But what ends up happening usually is, if the country is still operating in a good way and the companies within that country are operating for profit, then that value returns over time. And so we end up seeing a dip, and then we see that value return. This is primarily one of the reasons why I am a dividend investor, and that's because companies that pay a stable dividend and have a stable earnings ratio compared to that dividend, generally their value doesn't drop so much when we're in a financial crisis, so to speak. And these financial crises, like if we look at the dot-com bubble, what had happened was the value of the companies was so pumped up from speculation, and the companies really didn't offer a service. They had no income stream to allow for the value to be held at those high rates. So the collapse was really inevitable in those companies that were overvalued. So what I look for in investment is trying to buy companies that are a good value. If you're buying it when the price is right, and buying a company that's not overvalued, then collecting the dividend. That's the style of investing that I like to do. And I also am not relying on this income yet. I'm not quite retired yet. So one day when I am relying on the dividends, I'll probably go into even safer investments by picking companies that pay even a lower dividend. Right now, I try to find companies that are paying anywhere between like the 6 and 10% range dividend, and I'm okay with the valuation of my initial capital outlay going down a little bit, because I know that as long as they don't cut their dividend, I'm getting that stable income every month, and I can either buy more stocks or buy different products. And of course, I'm diversifying between a whole bunch of different companies. So I'm not putting all my money into oil, and I'm not putting all my money into REITs. I'm diversifying across and trying to collect the best dividends that I can, so that in a market correction, when the capital value drops, I'm still collecting the maximum dividends that I can. And I actually really like when the market turns down, because I'm not in a position that I need to sell on a monthly basis. So it increases my buying power, and it allows me to actually purchase more shares at a cheaper rate with those dividends, so I can reinvest them further. So to get back to the original question, is there a chance that the value could go down to zero? Or if it goes really low, can it come back up? Of course, this is individual, but you have to think about how the company itself operates that you're investing in. So if you don't believe in the company and you think, wow, that's a terrible company, and a lot of other people think that same thing, then eventually that stock is going to keep falling. So what you need to do is find companies that have good stable income and have a potential for growth. It doesn't have to be massive growth, just a potential for growth, and then pays the dividend, and over time you'll just slowly accumulate and build up your funds. Anyways, I hope that answers the question. There's always a risk, and hopefully within that risk tolerance you can find a happy medium and invest in good quality companies. Thanks so much. See you guys soon.